Welcome back to the channel, everyone. Today I want to talk about how liquidations are coming for AMC shorts and how someone's actually calculated just how many hedge funds are going to be liquidated when NSCC 2021-005 comes into effect. So stay tuned and let's make some money. But guys, before I dive into the video, I just want to give a massive shout out to the 3,900 of you that have currently dinged that notification bell, because you guys are always the first to watch a new video as soon as it's released. Guys, we're so close to 4,000 people having that notification bell dinged. So guys, be sure to drop a like down below, subscribe to the channel and ding that notification bell if you haven't already so that you don't miss another video just like this one. And just a quick one before I dive in with the key information: if you haven't yet signed up with Moomoo to get your 4 free shares worth up to $3,350, then be sure to sign up using the link down in the description below. But make sure you deposit at least $100 to get the most out of those free shares. If possible, deposit $5,000 to get all 4 free shares. And now I want to dive straight in with the key information. So, part 1. SR NSCC 2021-005. Providing some clarity. Every NSCC participant must provide a collateral or minimum required fund deposit, i.e. margin, which will be increased from $10,000 to $250,000. Some of the biggest members have dozens of registered accounts with the NSCC. Remember that this is a margin requirement per specific account, not per broker, but per specific trading account that they have with the NSCC. Let's suppose Goldman Sachs would have 30 accounts with the NSCC. They would have to provide $7.5 million worth of collateral. As per Clearing Rule 4 and Procedure XV, that collateral is only dealt with in cash. According to a backtesting coverage realised through a corporate study from June 3, 2019 to May 29, 2020, 29 members experienced repeated deficiencies, causing them to fall below the 99% confidence target on margin levels. Out of 150 members under this study, 46 members would be impacted by the proposed $250,000 minimum required fund deposit, with 28 members which would have been required to deposit more collateral if this new increase had been implemented. Summarising this, we would witness smaller funds getting wiped out, forcing members to downside their number of debt or their value of debt and their collateral obligations towards the NSCC. This point here in the response from Kringle Kitten is very important. It doesn't sound like a lot of money to them though. I don't understand why this is such a big deal. And Kringle says it is a big deal for smaller funds. It's just a bigger rope around their necks, also tightening the screws. Not huge, but progress. It's obviously important to remember that $250,000 is only a small splash in the ocean for a giant fund or a giant institution like Goldman Sachs. But there are some funds and institutions out there that only operate with a few $100,000 or a few $1 million, and therefore an increase to $250,000 worth of collateral requirements is going to be a massive change. Now I think there is a minimum fund size that NSCC 2021-005 applies to. I tried to have a quick look around, but I couldn't find it. But I think it's something like a minimum notional trade value of $50 million. So therefore it's not going to impact those tiny funds that only have $100,000 in cash, but it is still going to impact those smaller funds that only just cross the threshold. Now, I'm not expecting 005 to completely liquidate Goldman Sachs straight off the start line, but if it does liquidate some of those smaller funds, it's going to be like a game of dominoes. When some of those smaller funds start to go and have to cover their AMC short positions, they're going to have to buy back a large amount of shares all at the same time. That's going to cause the AMC price to spike upwards and could start causing larger liquidations in larger funds. Now, I do think this comment is also quite important. This isn't necessarily about penalising or squeezing members by increasing deposit amounts. This is about the NSCC trying to ensure it has enough funds on hand to survive. $250,000 times number of members means that the NSCC and the DTCC will have more cash on hand. When things do start getting crazy and the market starts crashing and AMC and GameStop start spiking, obviously a lot of those hedge funds are going to have to lend out their long positions in return for cash so they can cover their short positions, but they're going to need to get that cash from somewhere, and that cash is going to obviously come from the NSCC and the other participating members. So the NSCC needs to make sure it has enough cash on hand. If it has $10,000 times number of members, it might not have enough cash, therefore $250,000 times number of members means it's going to have a lot more. I think there's something like 1,600 of these members that are going to fall foul to these new requirements. Even if each of those 1,600 members only had one account, times by 250,000, that's an extra $400 million for the NSCC. Especially if each member has 30 different accounts, like the example given here, that's an extra $12 billion for the NSCC, just extra cash on hand. I think this is also a brilliant update from Ihor. AMC short interest is $3.63 billion, 108 million shares shorted. I think that's 108 million shares on loan. There's very similar, but there is some differences. 21.17% short interest of float and 17.47% S3 short interest percent of float. And now here's the kicker. Shares shorted are up 22 million shares over the last week, worth $740 million and up 25.64% from the previous week. If you have a look at this yellow line, which is the short interest percent of shares, we can see it's massively rocketed up over the last few days, but on the good side, the AMC price has remained fairly consistent. Therefore, the shorts are adding to their position, but they can't knock down the AMC price anymore. Now, some of you might be leaving comments saying, well, it doesn't matter. The AMC price has already fallen so much, down from $72 to $33 to $35. All of the shorts can cover now and make massive profits, which is massively wrong. Shorts are currently down $3.31 billion in 2021 mark-to-market losses, including $257 million on today's 6.85% move. Yes, the shorts at some point back in June were down $5 to $6 billion, but now they're only down $3.31 billion. Yes, maybe some shorts are potentially in profit or broke even and therefore covered their shorts, but so many shorts are still very heavily underwater. This is why even at $35, shorts cannot cover their short positions for a profit or even a break even. They're still negative $3 billion on their trade, and that would most probably cause the end of a lot of large funds. Yes, the shorts can continue to try and hammer down the AMC price to say $4 or $5 per share to try and cover their shorts. But that's also very reliant on people actually selling shares to them. They can't cover their shorts if people don't sell them the shares, and we own most of the float. On top of that, to be able to beat down the AMC stock price all the way to $5 or $6 or $4, they'd have to increase their short positions massively, and therefore they'd have even more shorts to cover to get out of their trade. This is very much why shorts are absolutely stuck where they are at the moment. They can't cover now for a profit because they're still down $3 billion. And they most probably can't even cover now for a loss because people won't sell them the shares. There's not enough shares in the open market because we hold over 80% of the shares and we're not selling our positions. And this is why I personally feel that it's only a matter of when the squeeze happens, not a matter of if the squeeze happens. Although obviously, not financial advice. Also got another post here. Did everyone see the Yahoo Finance after hours? Glitch or the real suppressed price? Here's a screenshot of Yahoo showing the AMC price of $35.69 in regular trading hours, but an aftermarket price of $11,431 per share, plus 146,000%. Now this could absolutely just be a data glitch, or maybe one of those trades in the second book where the AMC price is supposedly much higher than on the lit exchange, accidentally snuck through onto the lit exchange and impacted the price, causing it to show $11,431 a share, with an excellent meme suggesting just that. One of those dark pools slipped through. I also wanted to give you a quick update on AMC's data, especially because in my video yesterday, the MACD was not on the screen as it was covered by my camera face. Here's the MACD line, and as you can see, we flipped green on Friday and had a continuation of that move yesterday on Monday. Hopefully we see it again, a continuation today of that positive MACD price. We also have the Monday reverse repo data, which again showed over $1 trillion in reverse repos. That's over 4 days in a row now that we've had over $1 trillion. Unfortunately, the Monday daily Treasury cash balance has not yet been released, but considering we've been losing $16 to almost $40 billion a day, I expect this to now sit at the low $300 billion position. Guys, if you haven't already, I'd really consider joining the Discord, linked in the description below, so that you get urgent news, updates and due diligence on AMC and other stocks, and notifications of when I buy and sell a stock. You also get entered into a draw to win $600 on the 28th of August, just from being a member of the Patreon. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.